Hi everybody, it's Thursday and we are on the floor of the New York Stock Exchange with Jim Cramer to break down today's market action. Jim, we are down 120 points in the Dow.
It feels like a reversal day that FANG went up so much, and I'm not quite sure why it went up as much as it did. They all have good stories, but when David was speaking about Netflix being worth more than Disney, that kind of did take my breath away. That's not right. I think that Disney has much more staying power worldwide than Netflix. So it gave me pause. The fact that Micron was able to reverse so hard after being up a lot. And then the very disturbing news about Brian Krzanich and Intel. I always say at the beginning of my show that it's not about friends, it's about money, but I have come to admire Brian and his wife Brandy very much. She always comes to the set. And Brian re-revolutionized Intel, and I wish him well. But he did pre-announce a better than expected quarter, and the stock went up and then went down. So we got to be, just be aware that the Nasdaq has been up, and the Dow's down. And unless a company's really domestic, like a Darden, which was a major hit for us for action alerts, I think that what you have to say to yourself is let's be a little more circumspect. This is a market that likes it when oil's up. That's a mistake. Oil needs to come down substantially in order to be able to reduce freight costs. But the market has been often wrong during this period, just like Micron traded down very hard at the beginning of the day. We're seeing some action alert names, 3M and Raytheon down for I don't know how many days. These are very good companies. 3M's almost at a 3% yield. At a 3% yield, the PepsiCo stopped. The Kimberly should have been down more off of Dara's incredibly negative piece. So just be aware that some of these stocks are overdone to the downside off of China. United Technology seems very good to me because once they finish Rockwell Collins, they can break it up. GE's harder because GE's got that debt load and they've got still some long-term care worries. But this is a market that feels reversible. And China's still weighing on the industrials. FANG's going up a lot. The fact that Micron reverse is telling. I want to be a little more circumspect today. If the only stocks that are up are U.S. retail, that's not the kind of market. And once again, the bank stocks are terrible. And that's right ahead of CCAR. That matters tremendously. And I just want to point that out, trying to get as many companies in front of people as possible.
And you said many times we need to see the bank stocks go up.
Yeah, and we do have CCAR. They do the report, and then next week they're cleared. We like Citi very, very much. We like JP Morgan. We like Goldman, and they've been terrible. Now, we made some sales higher for Citi. JP Morgan's been just horrendous. Goldman Sachs has been worst in show. I worked at Goldman. Goldman sells at 8 times earnings. That's almost unfathomable to me. They don't have a buyback right now. I think these companies are doing well in the volatility, but it doesn't matter. All people care about is that the relationship of the 10-year to the 2-year, and a belief that they're just not making nearly as much money as they can. I think that regulation and deregulation matters much more, and that deregulation is going to produce some very good earnings. But right now I'm wrong. At times you have to just take some pain. Taking pain 3M, taking pain Raytheon, taking pain Goldman, taking pain JP Morgan, taking pain Citi. But you have to be patient, and I'm willing to take pain in those because I think longer term, not unlike Darden, where we took a lot of pain initially, it makes some money.
All right, and we'll talk about Darden in our ActionAlertsPlus.com video. You guys sold it for a big gain, so we'll talk about that. Jim, you mentioned Micron earlier. You wrote about it in Real Money this morning. They're going to earn $3.30 a share for the next quarter, not the next year.
And yet it sells at $4 times this calendar year number, and that's because people believe that next year is going to be a down year. A lot of the analysts raise the price targets, but there's no conviction. And one of the things I always urge people to do is listen to the conference call, okay? Because you will hear that there is no conviction. By the way, the Daimler news is reflecting very poorly on anything related to auto, and those companies that have auto exposure are all going down too. This is the world trade going hell in a handbasket situation that people are extrapolating. I think it's overdone, but I want everyone to be aware that that's another undercurrent that's really cutting things to the quick.
Meanwhile, Morgan Stanley sounding the alarm on Kimberly-Clark. Will you agree with that? And I mean, because you spoke to Nelson Peltz a couple weeks ago.
Yeah, that's on Procter.
Because the Morgan Stanley note said that Procter's more refocused.
Right, and Procter's being tougher. Dara's a very good analyst, and Kimberly is under pressure, but I would point out that Kimberly is a higher yielding stock, and it's not clear how low it can go. It's the banks that worry me the most.
Jim, last night on Mad Money, you had the CEO of Williams Sonoma, who talked to you about...
Bruce Cayman did some analysis of the chart and says it's very good. The retailers are good. There's a UBS Evidence Lab piece out today that says that Burlington Stores is a sale. I don't agree with that. I think Williams Sonoma is a digitized play because more than 50% of their business is e-commerce, which allows them to be able to be very, very competitive. And their wares, their merchandise is very high quality. I like the story. I think Laura Albert is doing a very good job there.
And they're not giving up on brick and mortar?
No, they still think it's important.
Okay, Jim, who do you have coming up on Mad Money tonight?
I have a little outfit, a pizza outfit that's private, but I have Okta, OKTA, which many of you have asked about. It is a company involved. It's a cloud prince, we call it. This is the kind of day where it might be down. Like I said, this is a very important day because when you've had the Dow down as many days as you've had and you've had the NASDAQ up, something has to give, and it's more likely the NASDAQ be down. I just want people to be careful. We've had a very big run in the NASDAQ, and keep thinking. A lot of people are keying on oil, on industrials, and banks. And if all three of those are down, that's a very hard moment. Technology could be up, but technology could reverse because of how far FANG's come. There's a lot of unnatural buying in FANG history. So don't give up the ship, but recognize that we're due. We're due for a bit of a downturn. It's just we're due. And I think you have to accept the fact that I'm saying that being due is not the end of the world.
Okay, that's an important distinction. Jim, we're going to continue talking about stocks in our ActionAlertsPlus.com video. Please join us there.